Let's shift our attention now to the concept of global diversification. Why might you want to invest in other countries besides the United States? Well, this chart looks at how various countries have performed over the past 2 decades, and then highlights the best performing stock market each year. What you see is that there was only one occasion on which the United States was the world's best performer. This speaks to one of the reasons for global diversification. Another reason to invest globally is to smooth out your returns. There are periods when the United States is doing better and periods when other countries are doing well. But without a crystal ball, it's really hard to know what asset class, what country, what investment's going to do best. Many of the largest fortunes in the world, though, of course, they've been made with a single concentrated position where somebody put all their money in one position, put all their chips on the table. Right? However, keep in mind, that's a great way potentially to build wealth. It's not always a good way to maintain wealth. So think about diversification like this. You know the old carnival game, you go and there's a wall of balloons and you throw a dart at the balloons, and if you pop one, you win something. And usually what you win is a crummy plastic whistle. However, behind a couple of those balloons is a great prize. Maybe it's a huge stuffed panda bear you can give to your young children or grandchildren. Now, the best possible outcome in the game is you walk up, you pay $1, you throw one dart, you pop the balloon, and you get the big panda. But the odds of that aren't very good, and you'll probably end up with the whistle. What if instead, though, you paid $20 and you got 20 darts? Well, if you throw 20 darts, your odds of hitting the balloon with the panda have gone way up. Now, you've eliminated the possibility of that best outcome of throwing one dart and getting the panda, but that's diversification. That's how it works. When you diversify, you're by nature lowering the ceiling of possible returns, but you're also raising the floor. For many, many people looking at retirement savings, lowering the ceiling and raising the floor gives them the best odds of achieving success. Of course, in the carnival game, nobody knows which balloon has the big panda. But what if the person working at the stand said, hey, I've been working here for 10 years, and I can tell you that more of the pandas won have come from the yellow balloons. You might not throw all your darts at yellow balloons, but in that example, you'd probably throw a few more, thereby increasing your odds. You're relying on what's happened in the past to guide you a little bit going forward.